Thank you. Thank you for having me here. First of all, I would say that the trade data is pretty encouraging. In fact, we thought that the export numbers could be slightly below zero, given that the PMI export orders were not necessarily too encouraging, hovering at about 45. But again, this is another example that such PMI really tells you more about the sequential momentum, but much less so about year on year. The number actual turnout seems to be pretty firm compared to our expectation as well as the market consensus. So I think this is actually pretty positive news, alongside with the fact that import numbers were also better than we and also market expected. So this is suggesting that we are probably starting to see some of the impact being released from the policy easing measures that were introduced back in the late third quarter, early fourth quarter, starting to kick in gradually. That said, I would say I'm in the camp of the fact that we still see pretty large dichotomy in the Chinese economy at the moment. Service sector is doing really well. For example, if you look at travel, tourism numbers, tourism revenue, they have been actually going pretty well, as the recent New Year holiday number seems to suggest, well above 2019 to 2020 levels. And at the same time, I would say that's collaborated with also other type of information such as transportation and also box office revenue. So this contrasts against the other end, which is the industrial side, as you said, that we're not necessarily performing very well, partly due to the drag from the property market lack of activities. So we are seeing, for example, on the upstream raw materials output and also prices seems to be suggesting that demand is still weak, and we have yet to see a big change to that. How exactly this can change over time and going forward, for example, for the next 3 months or so, we are expecting more policy easing measures to come in to help, especially on the infrastructure investment side, which helps create jobs, create income, and therefore boost the consumption. But secondly, I would also say that it is not a new thing for Chinese government to focus more on infrastructure side instead of the consumption side, to try to create jobs, create income. At the moment, this is probably a tougher job than ever in terms of boosting the confidence level, restoring the consumers' confidence, especially. But it doesn't mean that it's mission impossible. In fact, we have seen positive signs that there is more room for monetary policy easing right now as the external environment is changing. The Fed is actually about to cut sooner rather than later. At the same time, the PSL from December seems to suggest that there is a better coordination between fiscal and monetary policy in China. So I'm not saying that this can be done, within the next day or two, but I think that it definitely deserves some more attention, and I think there are some positive signal for sure.